good morning, good afternoon, good evening, wherever you're located on the planet. It's good to be back. You're tuned in to the morning show of yours truly, Dex the Algo Capitalist. And we're starting a little late, getting a little late start today. I had a prior engagement that I had to deal with, and now I am back. So hopefully you missed me. And if you did miss me, go ahead and do me a favor and hit that like button. All right. Subscribe if you haven't already done so. And you should head on over to postwavetrading.com and get yourself some goodies that we got up there for you today. So we take a look at these markets. And right now you see the US dollar index is actually down 25 pips at 104.76 after breaking that 105 handle yet again. 105.10 is the high so far. Of course, the euro is now up 32 pips at 108.03. Finally, getting back above 108. Can it hold it? I don't think so. We'll see. Then you got the pound sterling up 33 at 125.79, and it's barely holding the 125 handle. I think it's going to roll over too here. And then you have the Aussie up 30 pips at 65.27. It did briefly dip below 65 for a moment, didn't stay there, bounced right back. But of course, the big story today is Bitcoin right now down $4,445, trading at $65,935. Now, to some, they would see that and say, oh my goodness, the sky is falling. Oh my goodness. But you need to take a breath, okay? Take a breath. Take a breath, all right? Relax. Remember, this market has not even had so much as a pullback. It's just exploded. And now it's pulling back. All right, we'll see where it settles before we start jumping to conclusions and saying the market's in correction and that it's hit a short-term top. That's not accurate as of this moment. Now, coming into today, the market's been wide open, right? Just marching to the top side. Bullish trend momentum reading, bull market, locked in bull market. Yeah, you had some bearish algo shift information, creeping up here and there, but for the most part, you're in a locked and loaded market. So it's understandable that the market would, start to pull back a little bit. That's what you expect. That's what you want to see in a healthy bull market environment. So, yeah, the market took off, and now it's right around the equilibrium intraday price inflection point. All right, it's just south of that right now. So, if you were a subscriber to the reports, you would have gotten the notifications to tighten up stops, and you would have been smart and wise to have done so. However, if you did not get the memo, if you did not check the DEX's watch list last night, then you would have missed out on that opportunity to get out at a more advantageous price. But don't beat yourself up. For those that use the report from last night to get short this market, congratulations. You have some nice little gains to book today. If I were you, I would probably go ahead and book those gains. But hey, that's just a suggestion, not a requirement. But just remember, at the end of the day, you'll never go broke taking profits. Remember that. Next, we got Ethereum futures. They're down pretty heavy, down 247. You're at $3,269.50. Now, likewise, Ethereum coming into today is in a locked-in bull market as well. Yeah, you had some bearish algo shift notifications, and you would have been stopped out on your long position with that and setting pretty right now. You could have even used last night's report to get short. And take a stab at that, which is also, understandable. But if you are on the sidelines waiting for your next entry, then you need to wait and see how these markets are going to settle today to see what you should do next. But it is a possibility that this is just the beginning of the pullback and that it could get a little bit deeper. Remember, when markets take off like a rocket without even so much as a pullback, when they do pull back, the pullbacks are quite substantial, and it can make it feel like the market's in an actual correction, even though it's not. So just remember that. The longer a trend runs without a correction, the deeper the pullback. And then once it goes into correction mode, the deeper the correction. All right. So just keep that in mind when you are in these markets. All right. No need to panic. Crude oil futures right now up 59 cents a barrel, trading at $84.30 a barrel. You did top out at 85.45 today, so hit the 85 handle in crude. Very interesting. You have your nat gas up 4 cents at $1.87. Gold futures up $24.40 an ounce, trading at $22.8150. That's $2,281.50 an ounce. And in the overnight market, it got up to $2,297.90, just shy of that 2,300 mark. So very powerful market right now in gold. Gold is powerful. Nothing bearish on the chart coming into today whatsoever. Silver is up 82 cents an ounce this morning, trading at $25.90 an ounce. It did break the $26 handle, $26.02 an ounce. And yeah, the question is though, is it gonna break that resistance zone, or are we gonna tap out here? That's the real question. The reason I say it, because coming into today, you have the bull market scenario going on, but you have bearish trend momentum reading and a bullish algo shift. So someone could make the argument that this is just algo shift momentum pushing the market and not really trending, and that it's going to actually take a more of a longer term consolidation pattern. So there's some argument that can be had here in your silver. We'll see how it closes, but definitely this is one that I think a lot of people missed because of the overall bearishness in the market. And then this one kind of turned the corner right during the holiday. So very interesting turn of events there in the silver. Copper this morning up a penny at $4.06. Dow futures down 460 points at 39,434. Again, just like with Bitcoin, the Dow just going straight up, no real pullback. So the longer you go without one, the deeper the pullbacks occur when they occur. E-mini S&P 500 down 45 at 52.50 and a quarter. Once again, no real pullback. Now you're finally getting one, and it's kind of substantial. The E-mini NASDAQ 100 futures down 215 and a quarter at 18,282, and that is to also be expected. You go straight up, what you expect. And then the Russell My Hustle is down 43.9 points at 2079.10. Now, really, the Russell is in a very wide trading range with the bearish undertones to go with it. So, yeah, I expected as much. So coming into today, we did have an actual crash alert for that Russell, and you had an actual crash alert for the S&P, and you had an actual crash alert for the Dow. You did not have an actual crash alert for the NASDAQ. You just had the bearish trend momentum readings, and of course, the market took advantage of that. So that's what we're doing. That's where the markets are right now. To start off the new trading week, the new trading month, and the new trading quarter all at once. So here's the market news this morning. We have a new data, means another potential delay to rate cuts. And your fears about AI might have already been realized for a while. And he wanted to create a TikTok killer. It ended up costing investors millions. But the big story today is Tesla's trouble. Earnings season is approaching, and Wall Street's already ringing the alarm on a high-profile company. Analysts are concerned about Tesla's Q1 deliveries. One survey by Bloomberg has analysts delivering estimates for the most recent quarter down 6% compared to Q4. Tesla is expected to release the figure today. Tesla won't report its full earnings until later this month, but Wall Street is preparing for trouble. Last week, at least 3 firms lowered their price targets for Tesla. One analyst called it a nightmare quarter for the company, while another firm labeled Tesla a growth company with no growth. It's been that type of year for Tesla, which is down 30% in 2024. A shift in EV demand in the US has been a part of the problem, but that's not the only issue. China, a key partner and market for Tesla, is becoming one of the biggest threats to its business. And Tesla's polarizing CEO, Elon Musk, has given shareholders headaches with an ultimatum. It doesn't help that the group Tesla has been associated with is largely having a strong year. The Magnificent Seven was one of the biggest stories in the stock market in 2023. Share prices in the world's biggest tech companies couldn't stop climbing. This year, results have been a bit more mixed. Nvidia has remained a rocket ship, up over 85% this year. Meta and Amazon have also put up eye-popping returns, rising more than 41% and 20% respectively in 2024. Microsoft and Alphabet share prices haven't been as extreme, but both have outperformed the S&P 500, which is up more than 10% this year. Even Apple, down more than 8% of the year, is still far from Tesla's woes. Apple's main issue, not unlike Tesla, is tied to its drop in a once favorite market, China. It'll be uphill battles for Tesla. Its newest product, the Cybertruck, is exactly the type of EV shoppers aren't interested in. Instead of big and expensive, data shows the average customer wants smaller, cheaper vehicles. That doesn't mean Musk doesn't have any tricks up his sleeve. One strategy is getting more Tesla drivers subscribed to its full self-driving software, which can run $199 a month. It could beef up Tesla's profit margins and get it back in Wall Street's good graces. Trump media takes a nosedive. The share price of former President Donald Trump's media company tumbled as much as 26% after an initial surge. The drop came as a new SEC filing showed a net loss of $58.2 million last year compared to $4.1 million in revenue. Hotter than expected factory data cast doubts on a June rate cut. The bond market's expectation of interest rate cuts coming in June dropped below 50%, according to Bloomberg data. It's the result of the ISM Manufacturing Index expanding for the first time since 2022. Another example of the U.S. economy's ongoing strength in the face of high rates. Check out Ken Griffin's first investor letter in years. The Citadel CEO warned investors that 2024 is likely to be challenging, slammed the U.S.'s $34 trillion debt mountain, and laid out the player coach model that shapes his firm's top talent. It's too late to stop the AI apocalypse. There's a growing fear that AI will append lives and put people out of work. But what many people don't realize is just how deeply computerized decision making has already ingrained itself in every part of our existence. Remember, I was saying that for the longest time here on social media. Microsoft's downsized its Teams chat app to focus on its Copilot AI tools, according to a leaked memo. The reorganization reduced the number of people working on Teams and created a new central Copilot and future of work team. AI giants are scrambling to get their hands on reliable data. Companies like OpenAI and Anthropic are struggling to find enough high-quality data that can be used to train their chatbots. The Wall Street Journal reported that they're mulling synthetic alternatives instead. And that would be a big mistake. When you start using synthetic alternatives, it's not really the data. It's a amalgamation of pretend data, what you think the data to say or what you would like for the data to be, but it's not actual real data. And I'm sorry, if you want your computers to spit out the correct answers, you need to feed it the correct data. Now, yeah, data can be massaged to fit certain criteria or certain objectives. But if you really want to know the nuts and bolts of something, then you need to use the DNA of that something, right? You don't get blood work from someone who's not your patient in order to test your patient's blood work. You need blood from your patient, not someone else. Someone else's blood is not going to tell you anything. You need blood from your patient. You need the urinalysis from your patient. You need the DNA of your patient. So that's not going to work very well, folks. I think that's going to be the foundation of problems in the years to come with a lot of AI models and a lot of devices. If they put that cheaper version of things into their machines, you're going to get a lot of breakdowns and a lot of weird things happening. That's a recipe for disaster, and I do not recommend it. How the businessman who blew up MoviePass tried to create a TikTok killer and cost investors millions. People close to MoviePass chairman Ted Farnsworth said his playbook was to get involved with a publicly traded company, help raise funding, and drive up the company's stock. Then it would all implode. Isn't that the business model anyway of Wall Street? Take a company public, raise billions of dollars, and then watch as the stock goes to zero? Oh, maybe it's just me. More Sports Illustrated drama. The owner of the iconic magazine filed a lawsuit against its old publisher on Monday. Authentic Brands Group is seeking $49 million from 5-Hour Energy drink mogul who defaulted on a multi-year deal to publish SI in January. Russia's central bank helped Putin secure another term. Really? Okay, according to some experts, they said that the Bank of Russia governor policies have helped to stabilize Russia's economy in the face of aggressive Western sanctions. However, the former international central banking star has become as much a pariah in the Western world as Putin because of their support for his regime. In other news, Donald Trump's post $175 million appeal bond he owes in New York civil fraud case, how vast swarms of drones could transform the future of war, 6 things you should never do in a job interview, and what to say instead of according to recruiters. McKinsey is offering some staff 9 months of pay and career coaching services to leave the firm. Fast food chains like Burger King, Shake Shack, and KFC are doubling down on digital order kiosks, but watch out, you'll probably end up spending more money. Well, of course, of course. 7 of the most unique national parks in the U.S., according to someone who's been to all 50 states. Here's what's happening today. Forbes World Billionaires list will be announced, and the U.S. presidential primary elections will be held in Connecticut, Delaware, New York, Rhode Island, and, wait for it, Wisconsin. But what's up with this AI apocalypse, though? Right? There's no reason to be scared of AI making decisions for you in the future because computers already control your life. Imagine you're a hedge fund manager who's trying to gain an edge. To maximize returns, you decide to install the latest technology that allows a computer to interpret the changing winds of the market and make thousands of orders in milliseconds. The program helps boost your fund for a while, but the initial excitement turns to dread as you watch the program go rogue and buy hundreds of millions of shares in less than an hour. Your firm scrambles to stop the trades, but they can't. And suddenly you're facing massive losses, all because of a poorly installed algorithm. See, this is why you need the pulse waves. You need the attack reports. Cut out all that foolishness. I know this sounds dystopian sounding, right? But this catastrophic scenario isn't some troubling hypothetical about the rising threat of artificial intelligence. No, no, no. It actually happened over a decade ago when a coding mistake led to losses of $440 million for Knight Capital, eventually leading the firm to sell itself at a massive discount. Artificial intelligence isn't the future. It's just a marketing term for a slightly updated version of the automation that has been ruling our lives for years, even decades. Companies have cycled through a series of names to dress up their tech: automation, algorithms, machine learning, and now just AI. Not Allen Iverson, but just AI. But ultimately, these systems all boil down to the same idea: handing over decision making to computers to execute tasks at speeds far faster than a human could. And that's where their problem is. They've been trying to do that since the 1970s. It's not about speed as far as execution. You don't want the computer to do it for you. You want it to give you the answer so you can do it yourself. We got away from that. And that's where the trouble began. So while there's growing fear that a new breed of AI will infect our daily lives, put millions of people out of work, and generally upend society, most people don't realize just how deeply computerized decision making has wormed its way into every facet of our existence. These systems are based on data sets and the rules that human beings teach them, but whether it's making money in the markets or feeding us the news, more and more of our lives are in the hands of unaccountable digital systems. In many cases, these algorithms have proven useful for society. They've helped eliminate mundane tasks or level the playing field in some cases. But interestingly, the algorithms that undergird our digital lives are making questionable decisions that enrich the powerful and wreck the lives of average people. There's no reason to be scared of AI making decisions for you in the future. Computers have already been doing so for quite some time. You just haven't realized it. Now, the early internet was a relatively human curated experience, a disparate collection of web pages that were discoverable only if you knew the address of the site or saw a link to it on another site. Sort of like what is happening now when you try to do a Google search. Hint, hint, wink, wink. All right. Now, that changed in June of 1993 when the researcher Matthew Gray created one of the first web robots, a primitive algorithm designed to measure the size of the web. Gray's invention helped create search engines and inspired a league of successors: JumpStation, Excite, Yahoo, and so on. In 1998, Stanford student Synergy Brin and Larry Page made the next leap in automating the internet when they published an academic paper about a large-scale hypertext web search engine called Google. The paper detailed how their algorithm, PageRank, judged the importance of a web result based on a user's query, serving up the most relevant site based on how many other websites linked to it, which made a lot of sense on a much smaller and more innocent internet. But somewhere along the way, however, the tech industry tipped over the helpful automating jobs that slowed down our lives to distorting society by surrendering crucial decisions to computers. You don't want that. You don't want that. I see you, Qmar wants to know Litecoin and Ethereum Classic. What's my opinion? My opinion will be I have to wait and see how the markets close today. So I won't really know until afterwards. But my opinion is exactly what I published in the attack reports last night. That has not changed and won't change until the closing bell today. Once the closing bell is rung, then I will know more at that time, and then I will put out the reports on that. But basically, what I still believe is happening is the coupling again of the US dollar and Bitcoin. They seem to be back married at the hip again. If you look at today, the dollar is down, and so is Bitcoin. The other day, Bitcoin was up, and so was the dollar. So yeah, that's happening right now. And so I believe that as goes Bitcoin and Ethereum, so goes the rest of the altcoins, with very few exceptions. And I don't think that has changed or will change anytime soon. So yeah, folks, just something to think about as we are moving forward here. All right, just think about how fast things are changing all around us, and they are changing rapidly and starting to pick up the pace a little. Even it's kind of scary with the leaps and bounds how things are moving. So you know what it is, though. System works if you work the system. Bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give them nothing back. And on that note, smash the like button, share these videos. You never know who it may help, encourage, or inform. And you do want to stay informed these days. That's for sure enough. All right. I'll see you guys on the next one this evening after the markets close. I'm out. Peace.